Welcome back. In this lesson, I want to talk about why we trade earnings announcements. So the first point is that you can make profits very quickly, okay? When we put on our typical monthly income trades, we are typically entering the trade with 30 to 60 days to expiration, and we have an expectation that we will probably be in the trade from anywhere from a couple weeks to several months, depending on if we have to adjust or roll the trade. But with earnings trades, it's based around a specific event, which is the company announcing earnings like they do every quarter. So some of the strategies that we'll talk about in this course, we might be in the trade for a week or two leading up to earnings, and some of the strategies, we might be in the trade for less than 24 hours, okay? So it's based around this event, and so we can take our profits very quickly and book those profits and then redeploy that capital into other trades, okay? So you have the potential to make very quick profits. Next point, there's predictable implied volatility action, okay? So in our typical monthly strategies, we might want to sell premium when the options are high, when the implied volatility is over 50, and that kind of depends on what happens in the market is what dictates where implied volatility is. However, with earnings announcements, there's a very predictive action that implied volatility follows. Let's go to the platform and take a look at an example. So the chart I'm looking at is Facebook, and as you can see on the TOS platform, the earnings announcement is indicated by the light bulb, and then the red phone is the time of the earnings call. So what you'll see is typically about 5 or 6 weeks before the earnings announcement, you'll see implied volatility start to creep up. Now, why is that? Well, in anticipation of that earnings announcement, there is a lot of uncertainty, okay? Nobody really knows what the earnings announcement is going to be. Did they beat the analysts' expectations? Did they miss? What are their projections going forward for the business and for the price of the stock? So there's a lot of unknown. So in anticipation of that uncertainty, the implied volatility starts to build, it starts to rise leading up to earnings. And then as soon as that earnings announcement is made, a lot of times there's a decent sized move in the underlying stock price. But what we do know, and so the direction of the stock price is very unpredictable. But what is very predictable is that we almost always get a crush, what we call implied volatility crush, as soon as the earnings announcement is made. Okay, so now all the news is out, the announcement's been made, so the uncertainty is out of the picture, and so the volatility just gets crushed. So if we scroll along, we can see this kind of happens leading up to every earnings announcement. Implied volatility starts to build, the announcement comes out, volatility gets crushed. Okay? Volatility starts to build leading up to the announcement, news comes out, volatility gets crushed. Okay, this happens almost every time. Build up, build up, build up, crush. Okay? So that's what I mean by the predictable IV action. We can anticipate that and we can capitalize on that. So in this course, we're going to look at pre-earnings trades. How can we capitalize on that increase in implied volatility leading up to earnings? And then during earnings, how can we capitalize on that implied volatility crush? And then there's some strategies that we can put on post-earnings to take advantage of the action there as well. So, and then the third point of why we trade earnings is additional symbols to trade. On our monthly income trades, we have specific watch lists that we stick with due to liquidity and other things. But when it comes to earnings, there are additional stocks that we can trade that we typically would not put on our monthly income strategies for. So it gives us additional diversification, additional symbols to trade, and more opportunities. And lastly, the strategies that we'll be talking about in this course are very high probability trading opportunities. Okay, so we will always want to put the put the probabilities on our side, and utilize the strategies that take advantage of that. So in the next lesson, I'll teach you how to set up your watch list, how to set up your platform, and how to scan for these high probability trade opportunities. See you in the next lesson.